What if everything you thought you knew about Gen Z and their finances was turned upside down? This is the generation that's supposed to be tech-forward and savvy, but their confidence in how they spend, and more importantly, what they trust, might surprise you. And here's the twist. The very systems they rely on for security might be exposing them to new risks. Curious? Let's dive into what's really happening beneath the surface. A recent PYMNTS intelligence report reveals that Gen Z's approach to money management is nothing short of a revolution. The findings show that while Gen Zers are digital natives, it's the way they approach payment and savings, not just what platforms they use, that truly sets them apart. They tend to save more, stashing a higher portion of their income than previous generations. But what's truly intriguing is where and how they're storing those savings. Digital wallets and even cryptocurrencies are overtaking traditional options. When it comes to shopping, their preferences are clear. Almost half, 42% of Gen Z grocery purchases are made with debit cards, which is twice as common as credit card use among this group. Debit cards to many young consumers simply feel safer and more tangible, a direct connection to their money. But here's where it gets controversial. Despite this sense of safety, debit rails often serve as the front lines for fraud and offer fewer dispute protections than credit cards. Are Gen Z consumers overlooking the hidden dangers in their default choices? That's not all. Digital wallets inspire even greater confidence than conventional banks for storing funds. 13% of Gen Z savings sit in digital wallets compared to traditional savings accounts. Another 6.3% reside in cryptocurrencies, a trend not widely embraced by older generations. This shift signals a growing trust in platforms that, while convenient, don't always offer consistent protections if something goes wrong. So, is this trust misplaced or simply a reflection of evolving norms? And this is the part most people miss. Influencers are shaping not just what Gen Z buys, but also where they place their trust. An astonishing 81% of Gen Z reports that influencer endorsements at least occasionally influence their purchase decisions, almost 3 times the rate for baby boomers. Social recommendations illuminate which products or services feel reliable. Yet, these influencers have no stake or accountability in securing transactions. Should digital personalities hold so much sway over financial confidence? The ripple effects for financial institutions, tech companies, and payment processors are profound. It's not enough anymore to offer rewards or convenience. Gen Z wants signals of trust, whether that comes from robust security, social proof, or peer validation. This creates both fresh opportunities and significant challenges. Are companies prepared to deliver the reality behind the trust Gen Z expects? The report adds more depth. Gen Z saves more, tucking away 36% of their income in the past 6 months versus 27% for older generations. But they do it in newer, potentially riskier digital environments. They are also leading adopters of buy now, pay later, BNPL tools, using them at a rate of 18% compared to 12% among older consumers. But paradoxically, they own fewer credit cards, 55% versus 71%. Their average monthly bank balances are lighter too, $1,667 for Gen Z versus $1,959 for older consumers, a trend that may force lenders and credit card companies to rethink how they interact with this demographic. So, here's the real question. As Gen Z pioneers these new financial frontiers, should financial providers adapt their products to mirror Gen Z's perceptions of safety and trust, or challenge them? Is the confidence Gen Z has in debit cards, digital wallets, and influencer recommendations justified? Or is it a risky gamble waiting to be exposed? Share your thoughts. Do you agree or disagree with Gen Z's approach to money? Where do you see the biggest potential pitfalls or opportunities? Let's get the conversation started.